Hello out there to all the attendees tuning in for this weekly webinar of Private Equity Insights. It's evening here in Denmark and the UK as well. We have a few speakers from New York tuning in as well. It's truly amazing to have this panel today, probably the best lineup we've ever had. The topic and the content for today, as you see on the screen here, it will be, will you be left behind? 5 ways to avoid missing out on the data and analytics revolution. I'm Simon Carlson. I'm the CEO of P Insights, and I'm going to be introducing this panel today. We have a moderator on, Kevin, that I'm going to be introducing in a few seconds. But yeah, let's dig into it. I'm going to start by introducing some of the speakers and also SESAMm, our valued partner on this webinar, that they are experts on what we're going to be talking about today. The first speaker on the panel today, his name is Matt Anderson. He is the Chief Digital Officer at the Carlyle Group. Matt, welcome to this panel today. Please tell us a little bit about yourself.
Hey, thanks for having me. Yeah, hi, great to meet you all. I'm Matt, the Chief Digital Officer of Carlyle Group. Maybe a little bit about myself is this is my first gig in finance. So I don't come from finance and I don't come from private equity. Before I was with Carlyle, I worked at a company called Arrow Electronics, which is one of the larger companies most people have never heard of. But they touch, most of the semiconductors and electronic content that moves through most IoT and engineered products. And I ran the digital business there. So I ran a SaaS business, I ran an e-commerce business, and a media business for that company. And we were using really sophisticated machine learning and alternative data and our own data to mechanistically buy inventory and really, I think, doing some very interesting things around putting engineers around into other companies to help with their IoT projects. So very excited to be here. Thank you.
Perfect. And welcome to the panel, Matt. It's truly a pleasure to have you. And thank you for tuning in today. The second speaker on the panel today, his name is Vikram Mahida, and please correct me if I'm wrong with the surname Vikram. He is the operating partner at Apollo Global Management. It's truly a pleasure to have you on this panel, Vikram, and please let us know a little bit about your background as well.
Thanks, Simon, and I think that's spot on. You pronounced it well. I think you'll see a trend here. I am also not from a private equity or a finance background. I recently joined Apollo about 3 months ago, but my background is a decade in consulting, an AI startup, sold that startup and got into an operating company, and then I ended up here. So that's my background. But connecting tissue here is data, creating value through data and digital across the board. And look forward to sharing what we are doing here and how I see this work.
Amazing. Thank you so much, Vikram. And that is exactly what we're going to be doing today, sharing the best practices of you fine gentlemen to the audience. The third speaker on the panel today, his name is Misha Lokwinov. He's the Managing Director and Head of Technology Strategy at EQT Partners. Misha, welcome to the panel. Please let us know a little bit about your background as well.
Yeah, thank you, Simon, and thank you everyone for tuning in. And I have an amazing news flash for you. I am the third panelist now who is also not coming from financial services or private equity industry. I've joined EQT about 3 years ago, and prior to that, I spent most of my career in Silicon Valley, basically building and scaling software companies from any stage, from tiny startups to very large organizations. Was a CIO and CTO in my past, and also dabbled in some go-to-market activities like customer success and business development and strategic partnerships. And most recently, I was at Oracle, and I helped run their cloud business in North America and build their customer success practice. If you're not familiar with EQT, we're European born and raised, but now very global firm. We have about 70 billion euro under management, own about 100 companies, and minority investor in probably double of that. And what I do there is I help run our digital strategy. What that means is that I work with our deal teams and investment professionals on new investments, supporting due diligence basically, and helping us with digital value proposition. And once we acquire businesses and make these investments, then we work with management and the boards on value creation when it comes to digital. Happy to be here and looking forward to a great discussion.
Perfect. Thank you for that, Misha. It's good to have you here. Moving on to the next one, we have Sirvan here, the CEO and co-founder at SESAMm. It's truly a pleasure to have you as a part of this lineup today as well, Sirvan. Please let us know a little bit about yourself.
Thank you very much. And it's great to be here today. I have a bit of a financial background. Actually, SESAMm is a firm that works half in public markets with hedge funds, asset managers, insurance companies, and half in private equity. So we've been in this space of finance for quite some time. We're basically at SESAMm, we're an AI and natural language processing company. So meaning that we track billions of articles and messages on the web, and we transform that information into insights that can be leveraged by investment professionals, whether it's for due diligence or ESG monitoring, portfolio monitoring in general, or even sourcing. And we're a team of 70 people, 6 offices worldwide. And yeah, we work with a lot of the largest GPs and LPs. 6 out of the 10 largest private equity firms work with us. And yeah, I'm so happy to be there today and to maybe tell you a bit more about some of the technologies and alternative data sets that can be leveraged in the context of PE use cases.
Fantastic. Thank you so much, Sirvan. It's a pleasure to have you as well. And moving on to the last one here, which is going to be the moderator for this panel discussion today. His name is Kevin Pemberton, and he is the Executive Director and Digital Transformation Advisor for Microsoft. Kevin, please let us know a little bit about yourself. It's truly a pleasure to have you here.
Thank you, Simon, and hello to all the panelists and to those who are tuned in. I think I'm breaking the stride here, where I've spent my entire professional life thus far in financial services. So this is the charm. I joined Microsoft about 6 months ago into their cross-industry solutions division, customer transformation and innovation. I serve as both an innovation and business partner to their tier 1 financial services clients, developing and driving strategy, driving a digital transformation and customer engagements that accelerate net new markets, adjacent and alternative revenue streams and products and services. I'm based in New York. Glad to be with you.
Yeah, thank you, Kevin. Thank you for taking the time. And I think if you have ever been in a global webinar of PE Insights, then you probably know the next thing that I'm going to say, but we want to have an energetic and fun session today. So please use the chat function on your right-hand side. Use the Q&A chat function as well, or the function on your right-hand side. The chat function, if you can just say where you're tuning in from, that would be lovely, so we can see, are you in London, are you in Denmark, in the East, in the West, wherever you're tuning in from. And the Q&A section, we normally use that for the questions for the moderator, and you can ask whatever question you have, and you can also upvote others. So please ask the panelists a question throughout this panel debate. If you don't have the time, or if your family, friends, colleagues, partners, whatever, they don't have the time to tune in today, you can also watch it on demand afterwards, and I'll make sure to send out the links. And I think without further ado, we're gonna dig into the contents of today, and I'm gonna pass over the word to you, Kevin.
Thank you.
Have a good time.
Thank you. So we are here today at what I call an inflection point, and I'll start with the overall and arching question is: will you be left behind? 5 ways to avoid missing out on the data analytics revolution. You're coming from the investment management space on the public market side. Tremendous amount of market competitive intelligence research. I think there are those who are interested today in knowing, what is the state of data and analytics in the private markets, and specifically private equity. Is it underrated or overrated, by GPs? Where is the competitive advantage with respect to data and analytics? And I just want to have this as a dynamic and engaging conversation by kicking it off with Vikram, given your background and certainly what you've shared in terms of data analytics, the tools that are helping to drive this conversation and creating economies of scale. How do you see it?
So I think it's a fantastic question, and in one word, yes, you will be left behind. And let me sort of explain why I say that. First of all, you can't look at PE market as one single sort of monolithic market. I would say at a minimum, there are three stakeholders within this market. One is the overall sort of PE portfolio leadership. Second is the deal teams, and third is the portfolio companies themselves. And I believe that in each one of them, there is tremendous amount of opportunity. There's a new frontier that we all are here creating for each of those sort of stakeholders, if you may. And the critical aspect here is not just get carried away by euphoria that, if Misha at EQT is creating Mother Brain, that means, I should create that at Apollo as well. It's about what are you going to do with it? What's the action, right? And that big piece around insight to action, it's very undefined in each one of these stakeholder groups. I would say that there's tremendous amount of value that can be and should be created in the third bucket by enabling the management teams of the portfolio companies on how do you really use data to drive value, or how do you really quantify and figure out can you really create value from data at the underwrite level. And it's a little bit of an art, a little bit of a science, and some experience. So I'm sure my colleagues here will share more, but that's the framing I have, and I'm driving that.
I like that, Vikram. And when you talk about on the deal side, typically it's just narrowed to, typically the financials, right, and management, that sort of exploration, that sort of discovery, if you will. And what I'm hearing is that that can be expanded on, right, and it could actually serve in higher bidding, or in the opposite direction, if you are interested in discounting, right, these sort of early risk, right, in your investment. Maybe Matt, you want to weigh in here and any insights?
Yeah, I don't know if I know what the state of data and analytics are in private equity, but I think what I see is a context that's sort of ripe for a perfect storm right now. There's sort of an abundance of virtually free money. It feels like the frequency of trading has gone up significantly. The velocity of deals is faster, at least according to my colleagues, than anything we've seen before. I remember when I got done sort of with the first year of COVID, I was talking to our chief investment officer, and he said, you've seen 3 or 4 years worth of activity in the last year, and when you think about all that, that's quite transformational in its own right. But then you look at the forecast. I don't know if you remember a couple of years ago, there were a lot of forecasts that said data was going to explode, right? And that was before we all got shoved into our homes and every single conversation and sales call could be recorded and essentially be unstructured data with the most rich content and context in the world sitting inside of it, if you could just figure out how to get that out. And by the way, everything else that's happening at distance is just generating mega metadata right now. None of that was in the forecast, right? And so I think when you sort of see this kind of increased frequency, increased velocity, and then just dramatic increase in the amount of data, I think that the state of data in private equity is largely bringing a knife to a gunfight, because the amount of data is exploding beyond sort of the human capital in private equity and the ability to absorb that information, turn it into insight, put it into the deal flow process and evaluation process. And so in many instances, I don't know if it's underrated or overrated. I think it's just overwhelming, and people are confused and they don't really know what to do with this data. But there's a lot of people running around and saying data is the new oil, but it's really not, right? You can't control C, control V oil, but you can data. And so as you just think about this explosion and proliferation of data, I think that our industry is going to find that the way that we all used to find deals, the way that we all used to evaluate deals. And quite honestly, I think a lot of people in our industry have been discounting alternative data because we're not high frequency traders, right? But the ability to derive insight and understand what's going on, what's structurally happening, and which companies are likely to come to market from these kinds of data is going to be, incredibly sort of signaled through the data. And I think those that are getting in early, even though they may not know exactly what they're doing, they're going to be the ones that are kind of rolling around in the context of how do you build a data lake? How do you actually get insight? How do you turn it into some of these different, kinds of operational procedural things inside of private equity? And they're going to ultimately be the ones that have enough agility to deal with the tsunami that's coming, because it's just building right now.
Thank you, Matt. Any Sirvan? Matt, I love the metaphor and the characterization and knife to a gunfight. Sirvan, do you thinking about the sort of knives that we have? What kind of tools do you think we should be bringing to this kind of fight now that Matt has appropriately characterized it?
Yeah, I think that makes sense. And coming from the hedge fund world, it's something that is pretty clear. Like, no hedge fund would consider making an investment without market data, and the fact that market data is not available in private equity markets doesn't mean that this information is not critical. And so that really resonates with a lot of the moving parts that we see right now in private equity. And yeah, happy to dive in more detail on that. But I feel that there are a lot of new opportunities to bring in insights, and that it's potentially underrated, in my opinion, at this stage.
Great. Thank you all. As we think about the industry writ large and the strategics there that form what we call the conservative industry at hand, I'm looking, I'd like to find out from you all, not so much factors, perhaps even drivers that have caused private equity firms to lag in its involvement with data and analytics. What has been the impetus, the genesis of this lag? Maybe you could speak a little bit about that, Misha.
Yeah, no, absolutely. I think there are two key factors here. Of course, there are multiple factors, but for me too, right? First of all, lack of data, and another one is lack of capabilities and expertise. So I just wanted to unpack this a little bit. When it comes to lack of data, right? If you contrast this with public markets, in public markets, investors are used to a data-driven approach, right, and algorithms. And we're used to machine learning. It's commonly applied to use cases like asset pricing or quantitative investing or portfolio optimization. And of course, you have amazing technical developments happening in public market that are facilitated by availability of large amounts of data on all the companies that are publicly traded globally. In contrast, when you look at private companies, data is really hard to come by, right? So it's hard to get it, and it's also difficult to share it because of obviously confidentiality. And traditionally, private capital investors relied pretty heavily on personal networks to find the best opportunities. These conditions basically led to a pretty massive obstacle in the private capital sector for leveraging data and also leveraging emerging data-related technologies like machine learning. However, it's still early days. Things are starting to change. What we're starting to see is with, of course, digitization that is happening all over the world, large amounts of relatively high-quality data on various private companies are starting to become available. And this trend has enabled some recent machine learning use cases. One example that we now see quite a bit is in venture capital, where some firms are trying to estimate and predict the likelihood of startups that they're investing in succeeding. And they're leveraging, primarily public data sets like Crunchbase or LinkedIn. You can also gather data from other data sources such as search authority or website strength or employee sentiment data from sites like Glassdoor, or social sentiment data from all the major social networks, or digital marketing data. The list goes on. And we definitely see the tide changing a little bit here. Another major factor that I mentioned at the beginning is, of course, access to resources and expertise. At least in my experience, many private equity-backed companies are not digital natives, and they don't have the foundational capabilities and basically expertise in-house or outside to establish a comprehensive data strategy and the underlying data platform. And depending on the governance model and operational capabilities of different private equity firms that own these companies, it may present a pretty significant challenge for getting high quality data across their portfolio.
Very great, back. Great insights on the differentiation between public markets and private equity and the maturation model, if you will, relative to their data capabilities. Thank you for that, Misha. Sylvain?
Yeah, that really makes sense. And I just want to highlight something. There is a big difference that is made between public and private markets that is not totally natural, in the sense that the fact that private equity firms do not trade at a high frequency does not mean that data should be leveraged. We shouldn't forget that quantitative use case in hedge funds represent like 15% of the total AUM that is invested. And 85% of the AUM is invested in a discretionary way through people making informed decision based on market data and at a low frequency, actually. So it's not just the cool tech guys playing with data in New York hedge funds. It's actually the entire industry that moved in that direction. So we mentioned that, yeah, the lack of publicly available data sometimes on stock prices is an issue. I think there are other issues in private markets, and just the size of the universe. Like the number of companies to cover is huge compared to public markets. You have what, like 40,000 public companies. You have millions and millions of private companies with different layers of information, some that are super small, and they don't need to report in the same way, not just depending on countries like in public markets, but depending on their sectors, etc. So that actually creates a big issue on every side of the industry, including for data vendors, just covering all of these millions and millions of companies. And that creates issues, not just, we mentioned alternative data, so all these new data sets around like credit card data, sentiment data, etc., satellite data and the like. But even for your like PitchBook data, Crunchbase, etc., things that are considered kind of fundamental data now in private equity markets, it still creates issues. There's a lack of unique identifiers, for example, on companies. So there is no ISIN for private markets right now. And people are, in most cases, relying on things like websites, for example, URLs, in order to track and to identify a company, or will rely on the company name, which actually may change over time. So you get that problem of point-in-time information. And when you're building machine learning model, for example, at EQT, that creates an issue because your time series can be broken by that name change. And then, so all of these issues are already hard to solve actually in public markets, where there are entire teams building referentials and point-in-time knowledge bases. And it's even harder in private equity. It's really even harder. It's not just lack of information. It's that it's very difficult to gather these insights. And I believe that maybe one of the drivers of change currently is first, more data is becoming available. There's kind of that coming of age of alternative data. That's one of the trends. The data is becoming more structured. There are a ton of very innovative use cases. By the way, congrats to EQT on your new NLP paper that was just published yesterday. That's really cool. So a ton of new use cases, but there's also really competition. Like the hedge funds that have the data methodology are in the market now. Tiger Global is making the headlines for investing in private companies, and these guys are well equipped. So it creates a dynamic of wanting to really leverage these data sets to also gain a competitive edge, to also be best positioned in that global competition to provide capital. And we see that differentiation is also a big factor, making sure that through data, there is a way to have innovative strategies, innovative opportunities, including for companies in value creation processes. So yeah, tons of dynamics.
Thank you, Sylvain. I have a question actually coming in that might tie this all together here. It's from Akbar Sadid. The activity in PE has gone up significantly. Many PE firms rely on expert calls and do approximately 20 calls. The question is really, how do they eliminate bias? And is perhaps, are calls enough to have a real representative sample?
That's actually a very good question. It's one of our specialty at SESAMm. It's coming at the stage that a team would do expert calls. Pre-due diligence, you don't necessarily have access to the data room yet. You may have a SIM or you may not. And you're relying on insights from experts that may not give you a statistical view of what's actually happening in the market. And so what we do is we just take web data. Say, for example, we did an analysis on a beauty company a few months ago. We gathered all consumer insights, reviews, etc., to assess competitive dynamics, to assess use cases related to sustainability, for example, etc. And this gives a 360 view that is likely more statistically viable than these expert calls. Not that they are not interesting, but let's be honest, these 20 transcripts will not be read by the partners. So that information is going to stay in the associate's head, and it's going to be not fully leveraged. And by itself, it's going to be biased by a few people's perspective rather than looking at millions of consumer pieces of content.
Yeah, it's interesting because coming from the public market side, we know these expert calls tend to be quite prevalent, and while it lives in the associates' heads, they've been able to germinate that throughout the small 5 or 6 team members that exist on the investment management side. So great insight there. Would like to maybe jump ahead, if you will. I want to lay the groundwork here. When we think about the GPs and given, I think, Misha, you mentioned digital native and capabilities. It seems very overwhelming, as Matt characterized. Where do we want to? How do you start? And if so, where would one create the beachhead in order to implement the use of these technologies? It seems to be there's a tsunami of options, and it all appears to be table stakes. So, how does one as a GP approach this? Give me sort of a scaffolding, if you will, approach. Vikram? I think we've lost you, Vikram, on the sound.
Sorry about that. Can you hear me now?
Yes. Is that a fair question?
I think from my vantage point, the critical part here is to really figure out, who and in what area is ready to take action on this data, action on the insights. Because a lot of times what ends up happening is that you end up investing a lot of money in creating, the tech infrastructure, buying some alternate data, etc. These insights look great, but culturally, you're just not ready to take the action. So you have to really sort of, work backwards and say, who's ready to take the action? Because opportunity is everywhere. There is enough money to be created, at least the 3 layers that I sort of laid out, right? At the deal sourcing level, whether at the portco level or a set of portco level where we can create repeatable assets, and overall sort of portfolio management level. So it all depends on sort of where you are ready to take the action. In terms of operationalizing, at least what we are doing is really sort of creating repeatable playbooks at the sort of both at the diligence level as well as at the portco level, so that we are not reinventing the wheel. PE industry is notoriously known for working with small number of resources but highly effective, and so that's what we are doing. And the other piece is it's all about the ecosystem, partnerships. It's hard to strike right partnerships, but it's critical to partner with the right data providers, right tech firms, as well as in some cases actually right portfolio companies, depending on sort of what you're trying to do. So that's what we are kind of aiming towards.
Thank you. I'm hearing a theme about capabilities. I'm hearing differentiation. More importantly, I'm hearing what's replicable, what's repeatable, and what's scalable. Misha, similar view? I've lost you, Misha, on the, yep.
Sorry, we all struggle with our mute button, I think. Sure. No, very, very consistent view. I think where do we start, right? I mean, at EQT, we've started a long time ago, actually. We've started 6 years ago, and we've built a team of data scientists and software engineers that have been looking at this challenge, right, and developing use cases and solutions for quite some time. And we had a big vision, right, for where we would like to go eventually, but I kind of like to describe it as a moonshot, right, a 10-year type of vision. We're about 4 years, 3.5, 4 years into it. Aside from the vision, right, we kind of decided to build the ship as we're flying it and learn as we go and define the use cases, and also not try to engineer everything up front, because one thing that we've learned over the last few years is that technology advancements and innovation is in this area specifically is moving at an incredible speed. You may be developing algorithms that Google or Amazon next year develops and builds into their cloud offering and will make everything you've done basically obsolete. Right, so we decided to kind of take a very incremental, gradual journey, right? But fast forward to today, we have a fully fledged data platform, right? That is cloud native, that is now driving insights and a bunch of other things. But I mean, these were humble beginnings, right? Big vision, small team, iterate like crazy, not unlike building a software company.
Right. And one question that came in, and I thought it was appropriate to ask, given the attribution or the implementation and operationalizing of this data contribution to the process, how is the value attribution? How is that measured? What are we, Sylvain, how are you looking at this in terms of measurement?
Yeah,
tracking metric.
I think this makes sense, and actually just to echo on what Vikram was saying, it's important to focus, like you said, on the value and on actual users, etc. I think though that it's not possible to do everything without the groundwork, without structuring the data, without creating the data lake, etc. And it's not entirely possible to go straight to the value without some groundwork and without some global strategy. So I just wanted to highlight that. And in terms of value, what we get asked to measure in most cases is return in terms of either time or money. So these are the two big factors that we get asked for. And for time, we have a good metric in terms of sourcing. So sometimes, for example, we accompany GPs in creating sourcing use cases, leveraging NLP data in order to detect company. So similar to what EQT is doing, finding companies on the web, associating that with Crunchbase data, LinkedIn data, tracking their e-reputation, etc., which is our specialty at SESAMm, and then transforming that into tools which can automatically rank companies and make sure that deal teams have to spend less time on them. And in that case, it's very easy to actually measure time before and after the end of the process, because the list gets then analyzed by associates and can be leveraged. And on the other factor that is more on money, I think two examples that come to mind is on due diligence or value creation use cases. You can measure this versus consulting costs. So if you allocate capital to finding insights, it's more efficient to find them automatically and to structure them automatically than to have people potentially gathering them by hand, structuring them by hand, etc., especially in the context of companies that do a lot of consumer stuff, etc. And here you can really measure the decrease in costs for the same engagement with data-oriented tools and with pure manpower. That's something that is feasible. And yeah, the last one on cost is cost in terms of risks. And I think ESG is a perfect topic for that. When you have an actual governance controversy and the company goes down, that represents a huge cost in terms of risk management. And finding this, having an early warning detected from web data, receiving that alert, etc., that is invaluable in order to really get AROI and limit that risk associated cost factor.
And this is on the predictive and signaling side, correct?
Yeah, exactly. It's not. Yeah, I think predictive is a word that is still complex for a lot of GPs, right, in the sense that it's kind of moving too quickly towards a quantitative use cases, etc. And some firms really appreciate that and go in that direction, make it part of their culture. But for a lot of firms, it's more about alerting, automation, etc. which ultimately is part of the same process, but which is easier to measure and which is less black box. So it feels something that is more easier to control and that can really be integrated with existing processes rather than potentially replacing existing processes.
Great, thank you, thank you. I have another question. In fact, this one, Misha is on EQT's their native data platform, and in sort of ingesting sort of better decision making and investments and improving performance at the portco level. How have you done that? How has that been achieved?
Yeah, so the platform, by the way, that we're referring to, that Vikram also mentioned, we call it Motherbrain. You actually can find a ton of stuff on it online. But what we're doing when it comes to improving decision making, right, for investment professionals, we're monitoring and discovering millions of companies out there, right? The hypothesis for creating this platform was that, you know, there's something like 5,000 startups getting started every single day, right? There's no human on this planet who can keep up with that, right? So how do we use the systems and data to help us discover all these companies? And then what do we do with them when we discover them, right? So once we analyze all these companies, which right now is about 15 million across a dozen or so different data sources, then we layer advanced algorithms on top of it. And we essentially score and quantify applicability of these companies for our investment strategies. And we're essentially surfacing these insights to our investment teams, right? So they can, instead of sifting through gazillion different data sources, right, they can just go and look at specific companies and specific sectors and specific geographies that are scored the highest for the things that we're interested in investing, right? So this directly drives, of course, sourcing decisions, right, and also helping with diligence and qualifying that. And behind that, we're starting to build a people graph as well. We're monitoring something like 160 million people right now behind these 15 million companies, because of course, people are the most important aspect of the long-term longevity and success of these businesses, right? So we don't just want to see the products and the services, but also the folks behind them, right? So these are some of the things that we're starting to do, but you know, there's so much more to do here, right? We're scratching the surface. Like I said, I mean, it's a moonshot project for us, but we're pretty excited about where it's heading, especially when it comes to improving performance of portfolio companies, right? Like things like normalizing KPIs, right, that across the portfolio, so you can see for early warnings and kind of signals of where you need to engage your operating team or speak with management, or if there's any opportunities for doubling down on any particular strategies. There's a ton of predictive stuff that we're thinking about that we're going to be continue building.
Okay. And this is great because it's not just for those who are, you know, the strategics in this space have a less difficult time with this, but for those entities that have, you know, agnostic and have a, what I'd like to say, you know, multi-directional play, they can certainly be given an advantage here. Oh, we've lost you, Misha. Correct? Sorry, Misha, did you say something?
I'm having some technical difficulties. No,
that's quite all right.
No, go ahead and move on. My connection got shut for a few seconds.
Great. So one of the, you know, one of the next questions I'm really excited about is how do we get smarter here? And in getting smarter, it means utilizing best practices, the best of breed qualities and platforms to ensure that GPs effectively do so with the insights they're gaining and not just polluting with just a data dump. What's the methodology, protocol, if you will, Matt, that you would encourage or you would in fact prescribe?
Yeah, I mean, I think that we're in such early days. I don't think there are best practices, to be quite honest. I think, you know, when you're at the level of building on a machine learning algorithm on top of a data lake, there's very clear best practices. I'm a little bit of a contrarian, I guess, relative to others in terms of thinking about scalability. I think unless you're in a private equity fund or an alternative asset fund that has significant capital to invest in capability, the reality is you probably need to be thinking about how you can build momentum and you know, support and usership around individual use cases to start with. And so I actually think, the question is really different depending on what kind of a fund you are and how scrappy and, well capitalized you are for your own investment purposes. When I think about, getting started, and maybe I'll start there. I think doing something that's sort of low cost and allows you to explore one of these data sets, right? Like let's set aside machine learning for just a moment, right? Because it's so buzzwordy and people can, and definitely is very real, right? So I'm not saying, I'm not discounting it, but I remember the first day that I met Sirvan at a conference and he said, hey, I can tell you if, your company is basically trending positively or negatively on the internet. And I said, well, I don't know if that's, that great or not, but it was like less than $50,000 to find out. So why don't I just go see what that's like, right? And, we put that in front of a number of teams and, in some instances, it helped us not make some investments and not allocate resources to things that were, marginal or moving the wrong direction in some of their reputation and in those types of areas. And it can be really valuable. And, from there, then you start to step out into things like, panel data around purchasing or website data or people data, right? But I think just becoming like you should spend a year becoming more agile around touching the individual data sets and just developing an understanding of the ecosystem and using them on individual deals, right? Try to derive some insight that your deal teams find to be valuable. And the way that I think you do that is you really gotta, this isn't about like, let's go interrogate a data set for everything we can learn. I mean, that is, I would almost say that's the second phase of figuring out how to do this. I think the first phase is what is the thesis that this whole deal hinges on? And is there some way we can become more comfortable or more confident or certain around which direction to travel, the underlying operational KPIs or whatever those might be that sit against, this company that we're looking at. And so I think one of the best practices is actually don't put this thing in a black box context in a big data lake. Well, you should be messing around in Excel in your first version, I think. And, because then people really can get their hands on it and understand it. Most deal professionals are messing around in Excel most of the time, right? And so if you can't sort of get that in the context that they understand, you're probably going to just leave a bunch of people behind and they're not going to be able to really understand, how did this algorithm spit out fill in the blank type of thing. And that's what I really liked about, the work that SESAMm did for us. And that was very much our own progression. And, certainly we have invested and built out a lot of very similar kind of capabilities, but, I think, that would be my first bit of advice. My second bit of advice would be, pick your shots around, sectors. Not all alternative data is created equally. And there are certain sectors where there's a lot of signal to noise. There's a lot of just noise. Some don't have either, right? And some of it is highly regulated and difficult to get a hold of, right? Like if you're in the world of healthcare alternative data, I mean, God bless you, right? That's highly regulated. It's, a lot of people have a lot of hard time with that. We have personally invested in 3 companies that just deal with that problem, right, in the last year or two. And so I think that's sort of the second thing is don't lean in where the problem is really hardest to start. You want to lean in where you can get some proof points, I think, to start. And then I think the third piece is one of the reasons that I joined Carlyle was I was able to really sit down with the management team and say, I'm not really interested in a role where digital and alternative data and machine learning is sort of a second-class citizen, right? Like it needs to be, think about it as a new kind of bionic investor, right? It's a new, it's an eye that can see further and in the dark, or that maybe is a way of saying it that's coupled with your normal eye that has this great qualitative judgment. And so, but I think the learning, if there is one from that, is I think bringing deal teams in and early adopters who can be real allies to sort of put that thinking and judgment and very interesting way that private equity investors think about the companies they're buying, like in at the beginning, as someone who's helping to craft the solution that you're going to be building out of data or out of machine learning or out of, monitoring those kinds of things. Those are the ways that you don't build a perfect mousetrap that actually we were hunting something that wasn't mice at all, right? We were looking for a totally different kind of animal. And so, they're kind of, the advice is a little bit, basic in some level, but I really think what I've seen is that people in private equity are very skeptical. They're very, very skeptical, right? They're born to judge and really think about whether or not, what you're seeing is true. And so I think before you get to this great ambition of scale, you have to get past this. Does it work enough times consistently that I believe in it? And then you get the right to scale. And I think that would be, my advice to people as they're thinking about deploying this in private equity. But I think, going back to what I said before, it's really, it's going to be incredibly important. If you wait until everyone is making a lot of money in private equity from using alternative data and some of these advanced analytics, you're not going to be able to catch up. Because you're going to be trying to figure out what are all the data sets, right? And people like Misha and Sirvan and others, we're going to have locked them up in commercial deals where they can't be shared with other people, right? Like you've got to be exploring now. Right.
That's fantastic, Matt. In Sylvain, do you want to share some of the insights that you were able to generate from your conversations with with Matt and others on this panel as it relates to the initial hypothesis and marriage and creating a synergy, if you will, with data sets?
Yeah, it's true, and we really had a methods, thanks to Matt, help in order to provide value very early on to Carlisle's deal teams, and we work with almost all the teams now worldwide. It was not about just building a platform and building predictions and finding a very smart way to assess the probability of a deal success, etc. It was about sharing the data in the form of slides directly with deal teams in a way that was automated on our side, but easily consumable as part of pre-due diligence process. And that kind of method really started generating insights very quickly, put the data in front of users, like Matt was saying, and opened the door for other opportunities because people were starting to be convinced. And now we have a lot of group, a lot of support, etc., which enables new things. But there was really that need to convince people and to show time after time that it actually works, that this data is really valuable and can bring an edge. And that has been a very good process. And I definitely echo Matt's feedback on that.
Great.
I remember once I called Sylvan and I said, "Hey, I want to back test your thing on some of our mistakes." And I hadn't, really been around private equity enough to know what our mistakes. So I had to go find out, hey, what are some of the deals we wish we wouldn't have done? And then I said, look, why don't you just stop your ability to know as of the moment investment committee had a chance to make a decision? If we just put a number around like how positive does SESAMm feel about some of these deals, like 1 to 10, 1 being avoid at all costs, 10 is, go for it. What would we have said about these deals? And we didn't do like an exhaustive version of this, but we did like a handful of these deals. We did a few positive ones and a few negative ones. And the resolution that it came back with, I think people would have really paused at investment committee around some of those. And, seeing that and seeing what it would have surfaced and the plateaus that were coming and some of the sentiment that was moving in negative direction was very eye-opening for some of our leaders and some of our deal teams. And it really helped people, because they had to live those deals, right? And so, seeing some of that kind of data and what it can help you avoid was really eye-opening.
And when Matt called me, of course, it was a Sunday night, as you can imagine, for context.
It just further accelerated the conversation, giving the urgency. Let me move forward in the interest of time. We're at top of mind are the trends, right? Market trends, technology trends that we see will accelerate the use of data analytics for PE firms. But we know that there's also what we call the context of the pandemic. We've got certainly more, the term was SRI, it's now ESG focus. Is there something else that we're thinking that will further accelerate, will create an urgency at the top of mind for GPs? What should we be thinking of at top of mind, Misha?
Yeah, no, I mean, obviously digitization, right? The most obvious one, which of course got greatly boosted during the pandemic. I mean, we're talking already about every company, regardless of which industry they're in, becoming a software company essentially. And as an extension of that, these companies will also become data enabled. Another trend related to that is continued expansion of cloud computing. Right now, something about like 30% of enterprise IT workloads running in public cloud, and the rest are buried somewhere on companies' premises or in private data centers. And my prediction here, right, is that over the next few years, we'll see this needle moving quite quickly, right, and arguably much quicker than before. And with these workloads, of course, moving to public cloud, it will help companies make their data sets a lot more centralized and also more accessible, while also giving them access to these latest technology innovations that I mentioned earlier. You mentioned ESG. This is becoming a pretty major area of focus for most PE firms I know. To manage this at scale, you need to establish standardized KPIs like carbon footprint or what's your progress against diversity goals and things like that. And then you need to consistently track that across the portfolio, right? This has a very specific use case for data that requires playbooks, to Vikram's earlier point, working with portfolio companies. And we will also, I think, see a growing regulatory pressure in this area all over the world that will further drive the importance of that for data collection, analyzing this data and reporting. And last thing I will mention is about a growing in-house data expertise and also a growing ecosystem of expert partners in this area. Many private equity firms already have in-house data experts, but I mean, I think everybody on this panel does. But in my opinion, we're just scratching the surface here. I think we'll see a significant expansion of that in the coming years. And having in-house expertise and data will be basically table stakes, and also a key strategic investment area, which will, of course, fuel requirements also for various data technology and service providers out there.
Great, thank you, Misha. And Vikram, I see you're nodding in agreement. Anything you'd like to add here?
No, I think, look, I mean, I agree with Misha. And at the same time, I agree with Matt as well. It all depends on where you are starting. But I'll definitely say that I think Matt is spot on. It is a little bit of a winner takes it all kind of a approach. But also what I've also learned is that PE industry is quite contagious. If one GP is making money off of data, very quickly the next one will pounce on it. You just have to sort of start that flywheel. So it all depends on where you are in the journey. I think you got to start. That's the biggest momentum creator. But at the same time, if I were to, we did not talk about customer or consumer. If you really think about it, us as customers or consumers, I mean, we are massive consumers of data and creators of data. All our purchase decisions are driven by that. So the companies that we are buying, if we don't enable them or if we don't analyze them using consumer or customer data, God help us. I mean, financials cannot tell the story.
It's real.
A customer is leading the market tells the story. So I would say that, customer adoption is definitely going to drive use of data in PE.
And it seems to me that there is an anatomy to characterize the GPs who will win this future of investing with the use of data and AI and advanced analytics has to have this at the core of their operation, of operating. And when we think about that, what does that future look like for the firms that that embrace this early. I think Matt, it's zero sum, right? You mentioned that, and I think Misha, you echoed that. But what does the characteristics, the anatomy of the GPs who win this future of investment look like? Is it maturity, digital maturity within the organization? Is it you mentioned intelligent computing? The cloud. Matt, you talked about MLP and our position on that at the early outset. Where do we find ourselves?
I don't know who this question is for.
That's for anyone. That's for anyone.
There's enough being said and talked about technology and being a technologist. I tend to be in that direction or lean in that direction. So I'm going to talk about the people side of the equation.
That's right.
I think what I call data literacy is going to be super critical. And when I say data literacy, if you tell a PE guy, they'll say, what do you mean? I mean, I was born in Excel. Of course you were. But I'm talking about different kind of data. I'm talking about, when we talk about machine learning and skepticism around machine learning, building trust in it. How can I use it? How far can I take it? What decisions can I make so that, my investment committee is going to use it, credibly and be able to sort of, back me up. It's a different muscle.
Right.
It's not just a classic financial data. We're talking about different types of data and building trust in it. And that requires just literacy, learning more about it, top to bottom.
Are you doing a lot of adoption, change management as it relates to sort of this human capital shift, if you will? I see that's got to be some internal evangelism.
In my mind, that's 50% of the equation.
Mm-hmm.
Yeah, that's very true. I mean, I completely agree. I mean, another thing I'll mention here, right, and maybe it's going to be a little controversial, but in my worldview, a few years out, every successful private equity firm will basically become, to some degree, a digital data and software company. And we all know famous quote from Mark Andreessen that software is eating the world. Well, software and data is going to eat the private equity world over the next 2 years. And I'm not saying that we as an industry need to build all these capabilities in-house. That's not easy to do for a variety of reasons, but we need to own our data strategy. We need to own our product definition and roadmap, basically do the product ownership of what we're doing while outsourcing execution as needed to partners and service providers out there. And I think the second part of your question is, what is the future of this data? For me, at least near-term, holy grail here is where we can use this data that we're gathering and building to essentially automatically, with perhaps some human interpretation, but largely automatically use to underwrite various investment cases, right? And perhaps build an LBO models, identify specific value creation opportunities across the portfolio. Right, and that is a very difficult challenge to do today, with the state of private equity data. But to me, that's kind of the near-term, at least, objective and mission that we're going after.
Enjoy it. Thank you, Misha. Sirvan, anything to add here?
Yeah, maybe just a nuance. I think, like in public markets, there's going to be a minimum in terms of data needs and consumption for everyone in the next few years. Like every single GP will have to use more data. That's pretty clear. I don't think, though, that everyone will be an EQT, for example, in the future. Like, these are quant firms. If you compare them to hedge funds, EQT would be, in my opinion, like a Millennium or a Citadel. So these kinds of quant hedge funds, very systematic, etc. But this is not the entirety of the market either. So I have a feeling that there will not be maybe one single GP profile, but there may be more and more quant use cases and a really systematic segment emerging all the time, and everyone else going one step up. But you can be Berkshire and take fundamental decisions that are data driven and not purely systematic either. So I think there's a bit of nuance here also, and that the profiles of GP will not be the same and move all in the same direction either.
And could we maybe share a little bit about the cloud computing capabilities? Are you finding at the GPs that there's a multi-cloud? Are you finding single source? How are we looking at this? Because I think that's also the first step, if you will, or step change.
Look, based
Moving
on
from
my
on-prem.
based on my vantage point, cloud is a given. I mean,
Great.
it's not even a question. In fact, as long as the value of it is appropriately structured, I mean, it's a no-brainer.
No-brainer. Right.
And the speed, right? I mean, in PE world, speed matters the most, and you're able to do that with cloud so quickly. On top of it, the analytics widgets use it as basic as visualization to sort of, fancy machine learning. There is so much that's already invented out there. The first thing that I tell my teams and my portfolio companies that if you're not a software company, don't try to build anything. First, figure out how you're going to rent or buy. And cloud is the beginning. Now, when it comes to hybrid versus public, all of that's very business model driven decision, but it's a no-brainer.
Great. Thank you. Thank you all. Thank you, Misha. Thank you, Sirvan, Vikram, and Matt for your time on this panel and sharing your insights and delivering what I call a very robust conversation around data revolution within the PE space.
Thank you.
Perfect. And I think, guys, thank you so much. I just tuned my camera back on again.
Yeah.
I want to thank you all, not only the speakers, but also the attendees. I see that we still have a lot of attendees in the room, even though we are a bit over time. But yeah, as you said, Kevin, Misha, Vikram, Matt, Sylvain, and you as well, Kevin. I've learned a ton. I've been sitting here listening in, been doing my notes. Sylvain, you mentioned something about cash and the money side of it, the time side of it. Time-wise, thank you for taking the time for this panel discussion. It's been truly amazing. And money-wise, it's free for all, even though we spent time. But we're gonna Q&A-wise, I'm just gonna try and answer these questions that we have as well. Send out the responses, and then just on a short note, going forward, we have a weekly webinar next week, and then starting from next year, there's gonna be 10 to 12 events from Private Equity Insights, hopefully one in New York where we can see all of the Americans here, or at least the ones that are based in New York. For example, you, Matt, Vikram, and Misha attend this conference as well. But thank you so much, all of you. It's been amazing to listen in. Thank you so much.
Thank you very much.
Thank you.
Thank you. Take care all. Thank you so much for listening in.
Thank you.